The Fed's cut interest rates 0.25%, but mortgage interest rates increase. Why? Good morning, good afternoon, good evening, depending on where you're at in the world today. It is getting spooky, okay? The interest rates, the Fed fund rate yesterday 0.25% as expected, which is why interest rates have been falling. But then made some interesting comments afterwards that the markets did not like. Let's take a look at rates here. We are off our 3-year low, down to 6.27 on a 30-year fixed conforming. Jumbo loans still less than conforming loans at 6.20. FHA, which has kind of been our benchmark, we got down to 5.89, I believe. That was the lowest point yesterday. We're back up to 6%. These aren't huge changes. It's not like we went from 6 to 6.5, but it does reflect what the market thinks about the Feds yesterday. Mortgage News Daily is my go-to resource for all things interest rate related. These are all national averages, and they have a great article here. And I'm sure we're seeing, I haven't looked at all the news sites yet, but I'm sure we're seeing not a foregone conclusion. It's like they pasted a headline for all the news outfits to use in their comments after their announcement yesterday. An interest rate cut in December is not a foregone conclusion. The markets did not like it. It has nothing to do with the rate cut itself. As we warned, volatility would come from Fed Chair Powell's press conference. In today's case, Powell said that another rate cut in December was not a foregone conclusion. This was at odds with the market's expectations. So there was a rush to reprice those expectations, which is why you see interest rates slightly higher today. In relative terms, and I like that they add this in here, rates are still lower than most of the past year, but back up to similar levels seen in October 14th or 15th, which is when they did the last rate cut. So that's interest rates. I'm not surprised. It's not what I wanted to see. A lot of times when you see emotional reactions in the market to what the Feds are doing, it can tend to be short-lived. And he really got pressed on that in the Q&A. So I took a look at our local housing market here this morning. I didn't see anything that jumped out at me. Tomorrow's Halloween. I'm like, let's do a beach house. Let's escape to the beach. We're going to 2603 Seacrest Avenue North in Long Beach. 4 beds, 3 baths, 1,898 square feet, built in 2007. I'm very familiar with Seacrest. If you are familiar with Long Beach, you would know where the Breakers Hotel is. It's an old hotel that's very popular. This is right behind that hotel in a kind of, I want to say, almost a parade of homes style neighborhood for Long Beach. This home is listed by Leslie. Let's see what Leslie has to say. Welcome to the beach where the spacious 4-bedroom, 2.5-bath custom home awaits. On this street, they're all custom homes. This property includes formal dining area, vaulted up open living space with beautiful fireplace, 4 bedrooms. Primary suite is definitely a place where one can imagine waking up and stepping onto the Discovery Trail, just steps away from your front door. So the Discovery Trail ends at this neighborhood and then goes south, I think 7 miles through the dunes. It's very cool. Let's see, there are plenty of outdoor activities. Okay, all the stuff that you can do at the beach. Let's take a look. So at a house like this, on a day where interest rates have crept up and everyone's unhappy with what the Fed said yesterday, I'm looking at this as either a second home or a possible short-term rental. And we're going to cover our debt servicing coverage option here in a second. But let's go through these pictures. You can see the breakers, they're behind, the ocean's right there. Very nice neighborhood. Love the cedar siding. There's another good shot. And 525 is not bad. We're going to see if this will pencil as a short-term rental, but pretty nice home. This isn't a 130-year-old home that's going to require a ton of maintenance. This was built in 2007. Got nice hardwood floors, wide plank, powder room. This appears to be our primary. Well, maybe not. Not our primary. Dining room off the entry. So this, this would be a great short-term rental because the Breakers, which is not the nicest hotel in the world, you're going to be able to pick up all the people that maybe are looking to stay at the Breakers, but then they say, oh, let's get a house instead, and this one's right next door. Nice kitchen, like the cabinets, knotty pine. Stainless steel appliances, vaulted ceilings in the great room. Maybe swap out that carpet. Bedroom number 2. Guest bath. Bedroom number 3. Bedrooms are on the small side, but we're dealing with 4 bedrooms with under 2,000 square feet. Here's our primary. Vaulted ceilings. Nice walk-in closet. Dual vanity. Nice utility room. 2-car garage with a built-in closet. That's nice. Back deck, very small yard, low maintenance. Okay. So, if we were to purchase this home as a second home, this is what it would look like. Purchase price $525. If we put 25% down, now you can get away with 20, but I'm looking at this, if a second home, we want to get things as affordable as possible from a monthly payment. I think 25% down is a good way to go. $393,750. Interest rate, according to Mortgage News Daily, national average today is 6.27. If we do a payment breakdown, you're looking at $24.29 for principal and interest, $400 a month for property taxes. Now, when I looked it up, it looks like the current owner is probably getting a subsidy or a discount on their property taxes. So I ran some calculations at $400,000. In fact, if you need to do that, this Smart Asset website, you just put in the zip code and the purchase price, and it'll give you your average county tax rate for that property, for that purchase price. $100 a month for homeowners insurance, roughly. So total payment, $29.29. So not bad, $3,000 a month. If we were to finance this as a short-term rental, I would use a DSCR. We've talked about it in the past. It's not a well-known product, but it is incredible. Instead of qualifying to buy this home based off of your income, we're going to qualify based off of the rental of the home's income, of the potential rental income. So all we need is a credit score, a down payment, and an appraisal with a rent analysis. So the interest rate's slightly higher, but you'll be surprised. Sometimes these interest rates can be as good, if not better, than conforming. You'll just need to reach out to me if you want a custom quote. But for this example, we're going to go with a national average of 6.625 on a program like this. Everything else is the same, so we're looking at a payment of $3,021 a month. If we go to this 𝐟𝐨𝐫𝐸 website, which we've used a lot on this channel for determining short-term rental income potential. So the annual revenue is $92,345. So if we take $92,345 divided by 12 months, that's $76.95 a month in potential rental income, which is double, more than double our payment. So using that rental income, we're gonna have no problem qualifying without having to give our tax returns, our P&Ls, our, all of our income documentation. We're not gonna have to use any of that. So short-term rental, debt servicing coverage ratio, it's not a foregone conclusion. We'll see how long that sentiment sticks in the market. Like, subscribe, have a great Thursday. We'll see you tomorrow on Halloween. No, I'm not dressing up.